Welcome back to the channel everyone. Today I have some absolutely massive news for CCIV and Lucid Motors. The S4 filing has just been released. This shows some key information on Lucid's current performance, about their revenues, their expenditure, their assets and their liabilities for 2019 and 2020. Today I'm going to be dissecting the entire S4 filing. I'm going to be analysing their performance and telling you whether Lucid Motors are already setting themselves up for a promising future. And I'm also going to be exposing Peter Rawlinson's annual salary. So stay tuned and let's make some money. Now I want to dive in with the key information. So, looking at revenues and cost of sales for 2019 and 2020, we can see that they're already generating revenues of $4.5 million per year. We can also see that they're generating gross profits of between 15 and 20%. These revenues come from supplying all race teams in Formula E with battery technology. Now at first I was thinking, oh, $4 million? Is that it? But considering there's only 12 teams and 24 vehicles in the entire Formula E season, how much money can they really generate? It's quite a small operation, and obviously all of their future revenues are really going to come from sales of the Lucid Air and future Lucid vehicles. They then spent a whopping $500 million in 2020 on research and development and $200 million in 2019. All of these costs are obviously going towards research for the Lucid Air and future Lucid vehicles like the Project Gravity. If we compare this to Tesla, that's not actually that much money. Tesla spent $500 million in R&D in Q4 of 2020 alone, not the full year, just one quarter. However, this is actually substantially more than NIO spent. NIO spent around $380 million in R&D in 2020 compared to Lucid's $500 million. If we look at sales, general and admin expenses, Lucid spent around $90 million in 2020 and around $40 million in 2019. Comparing this to Tesla, that's nothing really. Tesla spent almost $1 billion in SG&A expenses in Q4 of 2020 alone. Again, just one quarter. And interestingly, NIO spent a whopping $600 million on SG&A expenses in 2020. Against the comparatively small Lucid's $90 million, that's a big difference. It seems that NIO have a lot of sales staff, general expenses and marketing overheads, whereas at the moment, Lucid Motors are more of just a team of engineers perfecting their craft and perfecting their vehicles. I guess in a way you could say that it's good that Lucid are spending more on researching and developing their vehicles to get them as good as they can possibly be, while not spending too much on the fluff like marketing and general expenses. Social media has done that for CCIV and Lucid Motors for free. Then there's also a massive reduction in fair value of a forward contract. Now this is basically a load of accounting terms all jumbled together, but effectively Lucid issued a contract to the Saudi PIF that they could buy shares at a reduced value. Obviously if the value of Lucid shares go up, then it's technically a bad deal for Lucid because they have to sell those shares on the cheap. As a result of Lucid going public via the reverse merger with CCIV, their shares effectively became worth a whole lot more. Lucid didn't actually have to pay any money for this expenditure, they just didn't get as much for those shares as they could have. Overall, this led to a pretty huge loss for the year of 2020. But I guess, what would you expect for a company doing loads of R&D but not selling any vehicles yet? I also wanted to quickly show this screenshot from the S4 because I think it perfectly explains the risks around CCIV and Lucid Motors. Obviously, details of the merger are looking very promising. However, there's always risks. Don't forget that Lucid Motors are an early stage company. There's a million and one things that could go wrong in their future, such as not being able to build a good, recognisable brand, not being able to stick to the deadlines for the release date of the Lucid Air, not being able to adapt to changing market conditions, and many, many more. However, Something very promising is that Lucid already have 8,000 pre-orders of their first vehicle, the Lucid Air. Not to mention that unlike a company like Fisker, where it costs $30 to make a pre-order, for a Lucid Air it costs over $6,000. So it's that much more impressive to have a large book of pre-orders because it's so expensive. It goes to show that so far Lucid do have a big order book and will have generated a lot of cash to hopefully meet that deadline for the release date of the Lucid Air, and they are on their way to building a good recognisable brand. Guys, if you wanted to know about the S4 as soon as it was released, you should join the Patreon and the private Discord, where the team and I talk about new information as soon as it's released. I also give daily market updates, and you get access to my stock portfolio, which is updated daily, weekly live streams, one-to-one access, and more. But for now, let's get back to the video. It also looks like the merger vote is going to be a shoo-in to pass. The S4 doesn't state the date of the merger vote, but it does state that AR, the Saudi PIF company, with their 300 million preferred shares, intend to vote yes for the merger. We can also see that this S4 filing contains more of a future forecast. The forecast in the investor presentation stops at 2026, whereas this forecast continues until 2030. We can also see a massive jump in production numbers from 2026 to 2027, going from 250,000 vehicles a year to over 400,000 vehicles a year. I guess this is when Lucid plans to open additional factories and produce more vehicles. But now let's get into the juicy information. Peter Rawlinson and the other executive salaries. For 2020, Peter Rawlinson took home a salary of $460,000 and a bonus of $200,000. Now if you think that's pretty good, wait until you see the next salary. Erich Bach, the Senior Vice President of Product and the Chief Engineer, took home a salary of $350,000, a bonus of $100,000 and share options of over $700,000, bringing his total compensation to over $1 million. The Senior Vice President of Finance also took home total compensation of over $600,000, just like Peter. Peter and Erich also have loads of unexercised share options all around the $1 to $2 mark. When this merger goes through and after the lockup period ends, these two guys are going to cash in massively. If you haven't already bought some shares in CCIV in advance of the merger and you're from the US, be sure to sign up to Webull using the link down in the description to get 2 free shares worth up to $1,850. If you're from the UK, be sure to sign up to Free Trade also using the link in the description to get a free share worth up to £200. Now let's head over and check out the balance sheet of Lucid Motors. Lucid have a pretty massive cash and PPE position. With current cash reserves of over $600 million, it gives them a great amount of operating cash to continue paying for this R&D expenditure. They also have $700 million of PPE, which is largely going to be the fit out of their manufacturing facility in Arizona. They also have around $1 million worth of inventory, which is probably going to be 10 to 20 demo cars and test vehicles for the Lucid Air and Project Gravity. Looking at the liability side, and it's not actually that bad. They do have some fairly chunky accruals of around $100 million, which is just expenditure largely for the facility fit out that hasn't happened yet. They do have some long-term debt, around $38 million worth, which again isn't that much compared to current cash, but there's also the preference shares for the Saudi PIF, around $2.5 billion worth. The balance sheet overall looks very positive and very bullish. Tons of cash and assets and barely any debt. Obviously there is the Saudi investment, but this isn't really debt because on the merger it's going to convert into equity. Something that I did think was very interesting is that Lucid dismissed their auditor Deloitte in 2020. Deloitte didn't issue an adverse opinion or a disclaimer of opinion, but did emphasise some points of doubt in their report. They then replaced their auditor with Grant Thornton. This part is very positive though. Grant Thornton are still a huge firm of auditors, one of the biggest in the world, and they have a worldwide presence. It's good to see that Lucid are using a reputable audit firm rather than just some sketchy, small, one-man band that could be easily bribed. All in all, I'm quite happy with the Lucid Motors financial statements. The P&L is as you'd expect. Lots of money spent on R&D. I would have liked to see a bit more revenue, but I suppose what can you expect supplying battery technology to 12 teams? It's not exactly going to generate billions or trillions of dollars. Their balance sheet is very promising. Lots of cash, lots of assets, and very little liabilities. Most of that cash came from the Saudi PIF investment. In terms of the CCIV stock price, the CCIV stock and the wider market has been down all week, with most of the market losing between 5 and 15% on Wednesday. It looks like I was a bit early calling that recovery last week after that very bullish price action. It looks like the market is going for a bit of a double dip on those early March lows. However, the bond yields aren't as high this time, so I expect the wider market to recover nicely over the next few months. And as always guys, if you enjoyed this video, then be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell, because that way you'll be alerted when I upload a new video. Cheers!